Good evening, fellas. One second, let me check the audio real quick before I start this. All right, it should be okay. So, good evening, folks. Welcome to Market Day. I'll never be able to say this. Welcome to the end of session, the daily review of indices. Today was a rather choppy day, I would say. The morning delivery was the whole point of this New York session. It didn't offer um, ideal entry whatsoever, and the aftermath was just chop back and forth action. And I'll show you what I mean by that in just a second. So here, yesterday, as I mentioned in the end of day video, market had this is the hourly chart on Nasdaq. We had a V shape, so we have a bullish S&T at the lows. It was a buy model, and at this level, after engaging with the buy sides and rejection block, it failed and it rejected that level. So there's a V-shaped rejection, and then yesterday's price action formed the first bearish divergence right after right here, right after the V-shape. So it had to target this time frames short-term liquidity, which is sell side from Wednesday 9 a.m. Also low hanging fruit. So the S&T during the overnight session, Asia session, it completed its objective. So the bearish S&T completed its objective once it raised the low. Now here, what happens is market is trading into discount actually. Okay, so if I take a look at the dealing range from the lows to the high, as you can see, it is the range equilibrium. And then let me change the color of that. And then not only it's completing the S&T divergence is objective, but also it's trading into discount. Now here, I don't see any fair value gaps here, so the only fair value gap that's closest to discount, you can take this one as your discount fair value gap, although it didn't touch it. There's probably a lower time frame discount fair value gap somewhere there. Not that it has to be a fair value gap, but you know, the more precise it is, the better. So here's a rejection block, also probably on the 15 minutes. Let's see, here's a rejection block and discount tags that level. I'm sure there's a fair value gap also here. I probably touched there too. Yep. And then reversed. Now here, today's price action though, now I'm gonna go down to the 1 minute in a second. Let me just finish these annotations. This is basically 2022 model. Sell side. The bearish S&T now becomes the buy side liquidity. So I'm going to annotate that as buy side. And then, actually, let me just put high probability buy side. And then the external here is the second leg objective for the hourly. Why? Because the hourly has the S&T. It's the hourly time frames reverse pullback, and it's this time frame's discount. So it pulls back into discount, delivers the second objective buy side. So this becomes the second leg objective of the hourly, which is basically one setup for life on the hourly standpoint. Okay, so let's go down to one. As you can see, it cleared all those levels and then chopped back and forth price action the whole session. There were trades. Not mean. Doesn't mean that you should be trading though. So here, rejection, market rallied. Now PO3, you can see that. Then it's pulled back here. Never touched it because of the thick price action. You can also use this one. That's probably the bullish S&T somewhere there. Let me see. I'm going to zoom in a little bit. This is the overnight price action though. Yeah, so here it is the SMT. Is it the same row? Yep. All right. The SMT. So this is the market maker. Not market maker, but the sell side, buy side, discount, rally, and then it formed new highs. As it goes higher, you need to adjust the dealing range. Here's the low, the last manipulation, all the way up here before the pullback, discount. Then there's another leg from the manipulation, all the way up before the pullback, discount, and then market opens. So here before market opened, as you can see, this is 8:30 news, trades down into discount, fair value gaps and volume imbalances here, respects it with the bodies and send it higher afterwards. Let's check. Yes, because I believe it forms divergence as well at range EQ. Did not form. It didn't form it there. It formed here. So after 8:30 delivery, the bullish divergence. Then we have the highs here. This is the mistake I did during the live stream. I didn't take it from here. I took it from 8:30 lows all the way up here, retraced down into discount, and afterwards at New York Open, it sent it right away and knocked out all the PDRAs, and not the PDRAs, but the liquidity that I was interested in. Now, because it engaged with both of them, I was not so interested engaging with this price anymore, and also because of this deep pullback. Now here, a couple more things happened. Now we have a new dealing range. Okay, so here before the rally, right there, formed a new dealing range, right? So this is the new dealing range, discount portion of the fair value gap. It came down there, violated it though. It violated it, not gonna lie. That's why I wasn't interested so much. Let's annotate this as discount fair value gap. Because it's a deeper pullback, it tends to consolidate it a little more. It's not like a V-shaped projection or something. It needs consolidation, new SMT divergences and stuff like that. But this becomes the high of the morning session, becomes the second leg objective, and from discount delivers that. That's the trade, and that was it for the morning session. Okay, so it completed at 10:14. After that, honestly, I don't think anyone should be trading anything after this. If you missed this, just let it go, come back in the PM session. Because this could have been a trending day. Okay, it didn't, but it could have been. So here, it set a new high. You have the new dealing range from the manipulation low all the way up to the high. Let me clean this chart a little bit. It forms, so rated the buy side, formed a fair value gap, then it kept going lower, range EQ chop, and in that chop, price did something. Okay, so here I think it was a yes, bullish divergence, sent the price to the short-term high, objective completed, and that high, that raid caused a bearish divergence, meaning second divergence, that's what you need to be taking into consideration, right? So here the divergence happened, price rallied, so the downside displaced IFED into that fair value gap. If I'm not, yeah, IFED into that fair value gap, displaced more, consolidation, not consolidation. It diverged here, right there. That's another short opportunity. Well, what are we targeting though? Okay, that's the most important thing. So we have this low and 8:30 low. Either or is fine. The highest probability is the SMT low though. Okay, so take that one as your dealing range. You can also use this range EQ SMT. Came down there, failed to engage with the sell side. It formed the SMT divergence right there. Now market is in what? It's in buy model. Now a couple things. Let me clean the chart a little bit though. This is the sell side. Didn't engage. Now here it could have engaged with the sell side. However, what happened is now you have a dealing range, right? So you have the short-term dealing range from SMT high to low. Okay, so I'm gonna clean this a little bit. Once it violates the high, the range equilibrium, so the premium fair value gap here, the premium portion of that fair value gap, once it violates it, it's not in a pullback. Okay, it is in this. It isn't reversal. That's what you need to understand. So here, the objective of this buy model, without engaging with the sell side, is not a pullback, but engage with buy side liquidity. So here, this is the first buy side. Engage with it. Then start becoming choppy here. It formed 1, 2, and 3 drives. Price sent it higher, and in that 3 drives, it also diverged right here. I need to show it on ES as well. Right there. That took price to the buy side one more time, and this ended up being a what? It ended up being 2022 model. So here, I'm not sure if it 3 drived into the range EQ though. Let me see. Yeah, it didn't. So there is a breakaway gap here. Okay, the fair value gap. It traded up into there. Respected, algorithmically delivered, which caused a pullback. So here, it did the Mohawks damage outside the fair value gap. Buy side is taken. Then immediately after, it displaced. Here, there is a lower time frame. S&T divergence at the highs here. This is not on 1 minute, perhaps on 30-second or even less microsecond time frames. You can look at the wicks and see that. And it's forming after a V-shaped reversal, basically. This is on, like, again, I said, microsecond time frame. Okay? So it goes for what? After that, it goes for the sell side here. And then comes all the way down to the range equilibrium here. Now in that range equilibrium, there is this fair value gap, which is discount fair value gap. Failed to break below. Okay, failed to go below. Initially, it respected the premium fair value gap, so it was stuck basically between the premium fair value gap and the discount fair value gap. Now, a couple things happened here. Okay, first, it engineered liquidity, then the sell side was engineered, then it engineered buy side. Okay, as you can see. Then it tried to rally towards the sell side liquidity, but it formed a bearish bullish divergence instead. So here, ES made equal lows, which is ugly, but it's what it is. Nasdaq making high lows, meaning it is failing to engage with the sell side. Thus, it rallied, flipped the premium fair value gap. Now the sentiment in the market has changed. We're looking for buy side delivery. So in that buy side, this is the second leg, basically second leg objective. And then if it should go higher, this is a high probability fair buy side, okay, because it's S&T. That's what I was primarily looking for during the PM session. It didn't happen, but right now it just tagged it overnight during the Asia session. So here, price came into the breakaway gap again. It failed to break out though. Okay, it tried, failed to break out and formed a couple things. So first of all, it never touched the range EQ. Okay, never. So the rallies, all of them, they were fakes, and also they were forming bearish divergence. So here, divergence. As you can see, ES was making highs. Nasdaq was making lower highs. So that's the first sign. It is diverging in. a fair value gap, and the fair value gap is being respected, algorithmically delivering. So technically speaking, if you wish to trade, you can trade the sell into at least range equilibrium. Now here it overshot, came all the way down here, engaged with the higher portion of the S&T divergence, which was interesting to watch, but this is the last 5 minutes of the market close. So it's pretty typical for market to turn sharply like this. Turn and tagged the second leg objective. Here, as you can see, the range EQ is choppy. It IFPD'd and sent it to the second leg objective, and overnight or during Asia session formed from the end dog. So this is Judas. I traded this actually, got stopped, but I traded this because when the market is clean, or not clean, but like when you have an unfinished objective from New York session, usually the first 2 hours of the Asia session is pretty volatile. So this is Judas, took the sell side, short-term sell side, caused bullish S&T right here, and like this happened right at open. Okay, so there's a gap, that's a long. Then you have a couple things: 8 o'clock buy side liquidity, and then the actual drawn liquidity, and it just displaced the same manner. So here, I was basically speculating around end dog to target the drawn liquidity. Because again, if market is in buy model, it's in buy model. It has to engage with the buy side. Until then, it's not going to displace. And also, during New York session, it already manipulated. Look, I wouldn't call this manipulation, but this is a manipulation. It already did the damage. So during Asia or during overnight session, it doesn't have to do it again. Using the end dog to target the draw liquidity is safe. So I hope you guys find this insightful. I'll talk to you guys tomorrow. Tomorrow's my monthly close, so be careful, but I'll be live streaming. So have a great night.